Kevin Green standing by with a look at the technicals and the options flow. What are we looking at here, KG? Bounce back, dead cat, reversal, anything meaningful? What do we got?
Yeah, I mean, this is a win for us today. If we can stay positive going into the last 25 minutes of today's session, Oliver, this is going to be a first step here. Now, I'm not sure if the market's really pricing in a V recovery like we saw the last time we had a pullback. This is actually showing some encouraging signs. And if you're actually looking at the open interest, we're still seeing some hedging activity taking place here. Some buyers of puts are still layering into the market. And we are kind of having this distributed range here. It's very concentrated in certain areas. And this could actually be very conducive for gappy type of markets, especially if we have liquidity moving to the downside here. So when you're looking at open interest, we kind of talked about it this morning, 5,400, still that negative gamma level that we want to be able to hold. And we held that today. 54.75 is going to be your intermediate pressure area, so we might see a little bit of a rejection, and we did on an intraday basis. We got to around 54.80 and then failed right around when the Apple event actually occurred. And your positive gamma level for this week, Oliver, is going to be 55.30. That's been an area of resistance for us over the last 2 weeks here. But once again, hopefully this fills out a little bit more. This kind of looks a little bit disjointed, and when you're looking at the volume flows here today, a little bit light than what we saw for last week.
Okay, so has it gotten, is it picking up a lot, or is it kind of a slow start here?
No, it's pretty slow. I mean, if you're looking at the top traded contracts, last time I checked around, 3 minutes ago, 4 minutes ago, we were sitting at around 55,000 for the top traded contract. Usually on a healthy day, that would be around 85, maybe even 90,000, even approaching 100,000 by the close here. It just doesn't seem like we're on that trajectory yet. Now, that could actually change here. You could have a situation where buyers start stepping in, traders start to step into these expiring options for today, try to create a little bit of a gamma squeeze to the upside, and that's when you can have this domino effect. I mean, we are trying to recover some of the losses that we had from from the peak here today. So as long as we can really hold, maybe the volume does pick up, but it hasn't been as aggressive as I would have liked.
Okay. All right, fair enough. So thinking about what it's going to take to get back to where we were, is there like brick wall level of activity happening at 5,500 kg, or how permeable does that area look?
No, I would say 5,500 is not going to be. 5,500 is not going to be your real area of resistance here.
Okay.
It's going to be 55.30.
Okay.
That's going to be the key one. And that really, I don't have it on the chart, but there's a V level from the highs that's sitting right there. So that is going to be the key area here. 5,500, obviously, everybody's going to be looking at that from a psychological level, but 55.30 is going to be the key one. That's the one that we failed pretty much every single day last week to be able to get us higher. Now, the environment's going to change here a little bit, Oliver. If you're looking at the skew index, I don't have a chart here, but we already have the market really kind of bracing for bad economic data this week. That's a little bit different than what we saw last week. And so if the market's already kind of preparing for the worst, and if we have better than expected data, then that could actually create this, a catalyst to the upside here. And I would say if we are going to match the same type of trends that we saw for last month, that would actually be the setup for this week. Not a further breakdown, maybe another 100 points to the downside. You can make a case there to go down to 53.50-ish because we are seeing some flows there. But this doesn't seem like it's a market that really wants to truly break down yet, outside of an unforeseen event that we have this week, because the economic data should actually be favorable for the bulls right now. Okay.
The downside put buying that's happening a little bit there, just a little nibbling, a little feelers being put out?
No, it's a little bit aggressive here. It's 53.50. So that's going to be the one that, we saw the same type of scenario last week at the 54.75 level. Started getting buyers to step in there for like 2 trading sessions straight. And then on Friday, that's where we actually had that level fail. And then we gapped down and lost around another 75 points there. So that's the same type of activity that we are seeing this week, or at least from Friday and today. So 53.50 could be your trigger area if we actually cross below that level where we have aggressive selling taking place.
Okay. All right. So that's our open interest volume. Anything we need to hit before we look at liquidity?
Yeah, let's bring up a volume chart
Okay.
here on TOS, because this is actually very interesting. We are trying to break higher here, and so we want to have this complemented with very strong volume. We've been kind of consolidating around that 54.60, 54.50 area, and I actually did highlight it on the chart here. 54.50 was actually a support level for intraday trading, even though the negative gamma level is 5400, 54.40, and so we bounced off of that. Let's see if we can actually attempt the highs for today around 54.85. Let's see if that's going to be the case here. The premiums at that level are actually still fairly high, even though we only have around 20 minutes left to go in today's trading session. What this could also be the result of too is just the fact that volatility is kind of melting off going into the close. Maybe you have some individuals that were shorting that market at the top starting to unwind those positions, and that's where you can have this melting up type of scenario. If you asked me 10 minutes ago, I would say this actually looked fairly bearish for today, and just maintaining gains was going to be the tricky part. But it seems like the market wants to try to test the highs that we had earlier in this session here.
Okay. All right. Nice. So from the volume side, it kind of looks like we're clearing some ground, maybe with a little bit more degree of conviction. Liquidity calm right now, coming back in a little bit. Did we get strained at all last week? Real quick, KG.
Yeah, so liquidity is actually moving to the downside, so that's not something you really want to see. That
still?
actually is a feather in the cap for the bears. Yeah, and Oliver, what we are seeing for the last 3 weeks, the Fridays are actually where we are seeing liquidity dry up, and usually it's inverse of that. Usually we see a lot more liquidity on an expiration Friday, and usually that's when we see a lot of flows. That's just not taking place. So keep this one on your radar. If we continue to see liquidity drying up, that could create gappy markets, and we are already in a bearish type of trend on an intermediate basis. So that leads credence to the bears from a technical standpoint. But once again, looking at the fundamentals for this week, it does favor the bulls. And if we still match what we did last month, we could see an aggressive buying activity taking place from Wednesday through Friday here.
Okay. All right. Nice. Thanks, Kevin Green. Good setup for the week. Getting us started.